Thank you once again for joining the fourth quarter annual results conference call. Most of you would have received the results, have done your analysis. Let me quickly go through the numbers. During the quarter, the total revenue grew by 15% to 853 crores. EBITDA at 165 crore is 19% of the sales. Pre-R&D EBITDA is 33% of the sales, almost on similar numbers as last year. The net profit after tax is flat at around 93 crores for the quarter. EPS for the quarter is 4.98 per share, 4.94 per share the previous year, same quarter. During the full year numbers, the total revenue was flat at 3131 crores. EBITDA at 642 crores is 20% of sales. Pre-R&D EBITDA is 33% of the sales. Net profit after tax up by 3% to 409 crores. EPS for the year 21.89 per share, 21.39 per share previous year. Capex for the year, including the capital advances, are rupees 604 crores. The gross borrowing in the consolidated balance sheet, including our subsidiaries, are rupees 708 crores, and company has 90 crore rupees of cash equivalents on hand. So the net borrowings as on 31st of March 18 are about 620 crores. The board has recommended dividend on equity shares at the rate of 4 rupee per share. We are aware we have a 2 rupee par value, so it works out to be 200% for 17-18, same as last year. Dividend payout stands at around 22% of net profit in the current year. I will now hand over the discussion to Pranav for the business operations.
Thank you, Mr. Vaidhi. We have managed to grow the international business. As you know, it's been a challenging environment due to price erosion by consolidation, but we've managed to grow the international business. Let me start with talking about the recent FDA audits at our facilities. Our Panthan formulation facility was audited by the US FDA on 12th March 2018. We were issued 3 Form 483 observations. These observations were relating to invalid OS and investigations, old-time study and analyst requalification. We are addressing these comprehensively and have responded to the FDA. The API-1 and API-2 facilities were inspected by the FDA on 16th April 2018 and were not issued any observation. The API-3 facility at Karachi is in the midst of an FDA audit which started on 14th May 2018. GMP compliance continues to remain a focus area for us, and we are approaching this with abundant caution. R&D expense was 121 crore in the fourth quarter, approximately 14% of sales. For FY18, we have spent 411 crores, approximately 15% of sales on R&D. At the start of the year, I had guided for about 15 to 20 ANDA filings. I'm happy to say that we filed 12 ANDAs during Q4, which takes us to a total of 26 filings for FY18. These include 3 for Aleor. Our efforts to add capabilities are also progressing well. The oncology OS oral solid dosage facility is ready, and the exhibit batches are under progress. The Aleor dermaceutical facility is also ready. Both the oncology injectable and the general injectable facilities will be ready in this year, FY19. New oral solid dosage facility in Jarod will be ready in the second half of FY19. 13 approvals, including 4 tentative approvals, were received during the year. We cumulatively have 70 ANDA approvals, including 9 tentative. We launched 8 new products during the year. Coming to the business side of it, the international formulations business grew by 29% to 352 crores for the quarter. The US generics business grew by 45% to 290 crores for the quarter. There was a one-time payoff in the US generics business, but if you take that apart, we would still grow over 30%. For the full year, the international formulations business was relatively flat at 1,200 crores, whereas the US business was flat at 920 crores. The API business grew by 9% to 198 crores in the quarter. and by 1% to 651 crores for the year ended FY18. The India formulation business had a revenue of 304 crores in the fourth quarter. The India formulation business was at 1,200 crores versus 1,254 crores last year. As you know, the numbers are strictly not comparable due to the GST accounting effect. Specialty segments degrew by 2% in the current quarter and degrew by 1% in the year. The acute grew by 19% in the quarter and 5% for the year. I would like to open the floor open for Q&A, if any.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Anmol Ganju from JM Financial. Please go ahead.
Yeah, hi. Thanks for taking my question. My first question is on the U.S. performance. Pranav, could you detail the nature of the one-off benefit we got in the U.S. international formulation? Because the idea here is to kind of reconcile the gross margin performance where we've seen around a 380 bips drop in gross margins year on year. So what was the nature of this one-time thing and how should we be looking at margins, especially the gross margins from an FY19 perspective?
So, Anmol, the one-time was related to an audit or from one of our partners on some chargeback reversals. So that was under 5 million, about 4.5 million or so. That was a one-time that we had from past profit payments, which came in this quarter. As to how to see the business moving forward, it's an interesting phase. We picked up some market share. While there has been price erosion on some of the larger products, there has been supply constraints. As you know, some of the bigger pharma companies are backing out of some products. So we're seeing a lot of volume growth happening.
And this volume growth would be coming at some cost of margins relative to what we've recorded in the past. Okay.
Yeah,
that's interesting. So thanks for that. My second question is on the US FDA issue that you highlighted. Now, you would have had initial discussions and feedback from your quality teams. We have seen, although not similar, but these kind of issues surface also with some of our larger peers. Do we have reasonable confidence that at least the 2 of the 3 observations that we've seen, out of specification results and hold time studies, we should be able to address them without any adverse or any scar on the US trajectory, because this is a fairly critical facility for us. And just if you could share, what the thoughts from consultants or your quality teams are and what your assessment in terms of resolution timelines and pathways.
So, Amol, it's a very valid question, and I think we're taking the utmost care with this and abundant caution, as I mentioned. And you're right, some of our peers in the industry, larger peers, have had similar observations as well. We had seen these before, so we were already on a course correction. As I said, we're addressing it. We've responded to the FDA. We have been proactively using consultants as well.
Even before the audit started.
Yeah, right. So we've been using consultants, and we are addressing this. We've sent our responses. We should hear back from them in the next month or so. So let's see how this goes. But yeah, it's very important, and we've taken a lot of care in responding to all the observations. The other thing is, it is not a repeat observation for us. It's a first-time observation.
Okay. That's helpful. I have more questions. I'll get back.
Sure. Thanks.
Thank you. Reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Damayanti Kerai from HSBC Securities. Please go ahead.
Hi, thanks for the opportunity. So my question is on the India side. So obviously this year had some aberrations, but I was looking at your therapy-wise performance. So they're in key growth areas, which is targeted by most of the players like anti-diabetes, cardiac, and gastro. We are lagging there. So what exactly is like pulling down there, or like what we need to achieve above industry growth in those key areas?
So you are right. I mean, I think when the overall industry got affected due to GST and other issues, we also had an impact on our specialty business, which has been a focus area for last few years. So you would have observed that in last 2 years we have been growing faster than the RPM growth rate, and as a result, the base has become like quite decent. And on that decent base, I think we lost some market share and some this thing because of this disruption on GST, where acute still did well. I mean, much better than the peers. Acute still did well based on its own old legacy and branding, but we suffered in chronic. I think in the second quarter, I had addressed that we had also had a change in promotional strategy where we are trying to be more proactively compliant with the guidelines which are still not valid, but which drafts were issued. And we think that that's a sustainable way to grow business. That also had more impact on specialty, as you would all know, in the business. Hopefully, the new strategy is already in place. Last quarter was not bad. Last quarter was good, and hopefully, going forward, we should be recovering our lost ground.
Okay, so going forward, we remain confident about mid-teen kind of growth for India formulations?
So we are fairly confident of again higher than industry growth rate, RPM growth rate.
Okay, and sir, what is our MR productivity currently as of FY18 end?
So MR productivity is within the range of, they are different divisions, but on an average it is about 275,000 per MR per month.
Okay, and last year how much it was?
Almost flat because we didn't grow the business and there was no major change in MR size also.
Okay. Thanks for your response, sir. I'll get back in the queue.
Thank you. Reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Shweta Karai from UBS Securities. Please go ahead.
Hi, I think my question is answered, so thank you so much.
Thank you. The next question is from the line of Charulata Gaidani from Dalal & Broacha. Please go ahead.
Hi, my question pertains to your...
Excuse me, this is the operator. Ma'am, may we request you to please speak closer to the phone?
Yeah. Is that okay?
Yes, slightly better. Thank you.
Yeah. My question pertains to your acquisition of Aurit Laboratories. You have 7 approved ANDAs and 4 pending approval. When do you plan to launch these products, and what is the addressable market size?
In terms of the pending approvals, they'll be launched, I guess, when we get approval. The ones which are already approved, the ones which make sense for us, we're going to take it over. I think within the next few months, we'll take it on our label and we'll sell it. They are already being marketed through the existing partner that Aurit had. So over the next few months in this year, we will take them back on our label and we'll relaunch them.
Okay. And how much is the revenue from these products that Aurit is making?
We haven't disclosed that.
Okay. Fine. Yeah, my second question pertains to your R&D expense.
Yeah.
How much of R&D do you project?
Do we project for this year? The year ending FY18, we've done about 410 crores. So we should inch up gradually, I would say, depending on how the projects progress, but anywhere between 450 to 500 crores.
450 to 500. Okay. And the capex?
So we already said that we have spent about 600 odd crores of capex during March 18. I think we need another 600 odd crores to complete the existing projects. So you are aware that we have 4 running projects under execution. one for formulation facility at Jarod. The details will be available. The one at Karkhadi, which is a general injectable plant, and the one the onco injectable plant, which is under execution at Manila. So that would complete this doesn't include the regular capex, maintenance capex, regular what we call expansion for the existing facility, but these are new projects we are focusing on.
Okay. I'm sorry, I missed the third one. One for formulation, one for injectables, and third for?
Third is for onco injectable, which is a different site, different plant. So like Pranav said, the OSD injectable plant, OSD onco plant is up and running. Now it is taking exhibit batches. Onco injectable plant is under execution.
Okay. Fine. Thank you.
Thank you. The next question is from the line of Sriram Rathi from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. Most of the questions have been answered. Just two more. One is on the balance sheet. The receivables seems to have increased significantly this year from 338 to 526, despite the revenue being flat. Any particular reason for the same?
Sure. So this year our US subsidiary company sales have gone up significantly. So a lot of sales, a lot of products have been transferred. This was the process for the whole year. A lot of products have been transferred from outside partners to our own subsidiary. Now, when they were through partners, obviously the receivables were for a much shorter period than our own subsidiary is marketing it. I mean, the collection cycle is a little longer. So the entire working capital, not only the receivables, also the inventories have, it's a direct fallout of higher business by the front end. Okay. And when we look at the numbers, the number is calculated in a whole year sale and 31st March receivable. And if you look at the last quarter sale, where there was a significant increase, the receivables represent the last quarter sales.
Okay. So basically, this is something which we should assume going forward now. This level of receivables.
Yeah, I think so. I think both inventory and receivable levels would stay at elevated levels. But I'm very happy to report also that the receivables for the domestic, which were very efficient even earlier, has been further squeezed by almost 2 days. So, I think our current receivables will be less than 23 days.
Okay, got it. And secondly, on the capex part, you mentioned 600 crores is still to be spent. So this 600 crores will be happening in FY19 itself.
Yeah, I think hopefully by March 19, most of our projects capex should be over.
Okay, and then maintenance capex should be around 200 to 300 crores.
Not so much, in our case, but it would be further expansion only. Maintenance capex should be in range of 120 odd crores.
Okay, perfect.
Then some R&D.
Right. Great, sir. Thank you so much.
Thank you. Reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Nitin Agarwal from IDFC. Please go ahead.
Hi, thanks for taking the question. So, Mr. Baheti, on the gross margins, this has been after a pretty long period of 70 to 73% gross margins. Gross margins have sharply dipped this quarter. How should we look at gross margins going forward, sir?
So, yeah, that's fact of life because we have been facing price erosions in international generic business like all other companies. So while volumes have gone up, the price realizations have gone down, and that would directly impact the gross margin. I think, you can broadly take this quarter number as an indicator for going forward.
Okay. And Pranav, on the US business, so how are we looking at the new launches for this year, and in terms of even new launches as well as the products that we're going to be getting from the partners? So overall, how many of these such products we're looking at as far as being sold under our delivery for this year?
So, as regards what we have with the partners, I think most of the stuff that we were going to take back, we've taken back directly. There's a handful of products which are still with the partners, and up until the agreement expires, they'll continue. But that's only a handful of them. most of the pending approvals that we have, those are all not partners, so they will come on our labels. As and when we get approvals, we should launch these whenever we get a chance.
And how many do you see? How many approvals and launches do you see this year?
So the first step would be getting the EIR to the facility. Once that happens, I'm assuming we get anywhere between 10 to 15 approvals.
Okay. None of the apart from whatever the tentative approvals you may be launching, or even that is going to be an issue without the EIR?
See, I think until the EIR comes, and I think we'll have to wait for what the FDA says. We'll just wait and see. There's some which may be from a CMO, that shouldn't be an issue. But the rest, until the FDA gives a go-ahead, it's tough for me to say, but I think we'll know in the next month or so.
And secondly, on how many ANDAs do you file through the Aleor JV this year?
Three ANDAs from the Aleor JV.
And what's your thoughts on the dermatology market? The market dynamics have undergone a fair bit of change over the last year and a half. How has that changed your own dermatology strategy?
I'm just going to hand it over to Jason, head of strategy, to answer that.
Yeah, thanks, Pranav. Yes, I think on the derma space, you're right. I think as we are seeing in most other segments, competition is increasing everywhere. Then I think kind of that was anticipated. So the same thing is also reflected in derma. But as we look at the entire space from our perspective, we still think that the space offers good opportunities. There are still a number of products where there is enough room. And I think for us, I think the entry is perhaps at the right time. It's not too late. So from our perspective, I think the derma segment still holds enough potential.
Okay, thanks. And lastly, Pranav, we had a pretty sharp ramp up in our overall ANDA filing this year. Is there also been any qualitative change in the profile of the filing that you've done this year? If there is some way to sort of to define that?
It's tough to say that, but as you know, what we've been mentioning is in our portfolio we do have a few tough products, some old ones, some FTFs. So the mix remains the same. But progressively, yes, we do try doing better filings, but the mix remains the same.
Okay, thanks and best of luck.
Thanks.
Thank you. Reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Bharat Seli from Equirus Securities Private Limited. Please go ahead. Bharat Seli, your line is unmuted. You may go ahead with your question, please.
Yeah, hi. Thanks for the opportunity. So I just wanted to ask, how many products are we seeing in the high-value launches for the FY19? I understand that the Panela facility is under the FDA issues, but considering that if we get an perfectly okay from FDA, so how many approvals could we see in terms of high-value ones?
Yes, I think total we would see about, as I mentioned, anywhere 10 to 15, depending on how it goes. We haven't disclosed what type of approvals, but yeah, we'll see about at least 10, if not 15 approvals.
Understood. And sir, where are Almiron approval stands? Is there any query or we have responded to all and we should see approval anytime soon?
Sorry, can you just repeat? I didn't quite understand what you said.
I'm asking where Almiron approval stands, ANDA filing. We have filed for Almiron, right?
Almiron, no, we don't disclose product-wise approvals, sorry.
And sir, I missed your commentary on increase in debt. So what is the particular reason for the increase in debt?
So the capital expenditure is being put on for new projects. We have discussed all the new projects where I think we are putting on cumulatively, we are putting about 1,200 crores and the borrowings is essentially to fund the new projects.
Understood. Thank you, sir. That's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Dheeresh Pathak from Goldman Sachs. Please go ahead.
Yeah, thank you. Sir, this 2% growth for India business in FY18, this is like-to-like adjusted for the GST and excise adjustment?
No, these are not like-to-like. If you really do a like-to-like comparison, then that would, you'll have to add about 6.5-7% to the growth rate. So this 2% would then become about 8.5-9.
instead of 2%, like-to-like growth is 8% for the full year.
So I think somewhere we have mentioned this. These are not really comparable.
Okay. And can you give plant-wise pending ANDA numbers?
So most of, as Pranav said, most of the current ANDA filings have been from our formulations. I mean, from our one, there's just one single plant. And our filings have just started. So most of the filings are from our formulation plant. Some, very handful of them, very few of them are from CMOs.
Okay. All right. Thank you.
Thank you. Participants, if you wish to ask a question, please press star and 1 at this time. The next question is a follow-up from the line of Anmol Ganju from JM Financial. Please go ahead.
Yeah, hi. Thanks for the follow-up question. My question is a follow-up to the comments Jason made that there is incremental greater anticipated competition in some of the key target therapy areas that we were focusing. I know this was expected and anticipated, but has the magnitude surprised us for any particular therapy area? And if that's the case, then is there merit in probably looking at some of the pipeline projects where the IRR case or the payoffs might not be worth the effort or spend in the new world of generics pricing regime?
So, Anmol, it's actually an ongoing thing that we do. As we know, there are people trying to approach all these new areas, and everyone wants to get into them. So it's not something that's shocking. At the same time, it's not worrisome to us either. This is something that is anticipated. So that's the first thing. Second thing, on our overall portfolio, this is something that we keep re-evaluating and we keep rejigging as we go along. We keep pruning down if we feel dependent. And there's various aspects. One is competition. IP is another one. Complexity is the third one. So it really depends. So we keep fine-tuning our portfolio and the IRRs based on what we see, and we drop products or we put them on hold as well.
And have we kind of done any exercise of late where things have kind of dramatically changed? Because that's what a lot of your larger peers seem to be hinting at. And the rollback in R&D spend that we see.
No dramatic exercise, changes that we've seen. But product-wise, we may take some, we may prioritize, we may drop some. That we keep evaluating, but nothing overall that we feel that we want to do. Nothing dramatic.
Thanks for your response.
Thank you. The next question is from the line of Rahul Sharma from Karvi Stock Broking. Please go ahead.
Yeah, I probably missed out on that milestone payment which we have received in this quarter. What was it for, sir?
So actually it was just from one of the partnered products, or actually portfolio partnered products. There was some more chargebacks related stuff which they got a credit back. So hence the profit share came really later. That's it. There's no milestone.
Okay. And just in case if there is a delay in the EIR, what would be the sort of launches that you are looking at in the current year?
Rahul, it's tough to say. As I said, that assuming on a base case that there's nothing and the EIR comes on time, then we're looking at about anyway 10 plus kind of launches. If there is an issue, I don't know. It's tough to say. But right now we're hopeful that we'll try resolving it soon.
No, but you have audit, you have your other approvals which have come in. Wouldn't you be able to launch?
Audit launches will happen, but again, they're already in the market. So they'll just come on our label. So I'm not counting audit for any of the CMO products. Those are unaffected by this.
Okay, but those which are already approved and we have not launched, what is the number of products which are yet there?
Number of products which are approved and not launched. Number of products approved and not launched, I think it's about 10 or so, but 9 products there.
Okay. Any meaningful products which you could probably launch in a worst case scenario?
It's tough to say. I can't disclose that.
Okay. Thanks. I'll join back.
Thank you. The next question is from the line of Tushar Mandani from Motilal Oswal. Please go ahead.
So just to know if any target action dates over next couple of months from the formulation facility.
Target action date for?
for any of the products over next couple of months from the facility, formulation facility?
Yeah, we do have a few products, handful of products, which hopefully we should have some approvals coming in the next few months. But as I mentioned, we've given our responses to the FDA, and we should hear back from them within the next month or so. Then we'll get a little more clarity.
Understood. And any specific, is this economic viability or any other reason for the approved product not launched, or is it to do with this regulatory hurdle?
No, only economic viability or opportunity. We generally sometimes don't launch it. This has been these 9, they've been in the system for a while.
So these are not the recent ones.
No.
Okay. Thank you very much.
Thank you. The next question is from the line of Rahul Jamani from IIFL. Please go ahead.
Hi, sir. Sir, have you received any approvals from the Panela facility post the 483?
No. This has only been like a month and a half, so we haven't received anything.
Okay. And sir, over the past 2 years, we have seen a strong ramp up in both your ANDA filings as well as the R&D team strength. But do you see, given the scenario which we have in the US generic market, do you see there are enough opportunities out there for you to continue filing 25, 30 products every year?
Yeah, I still feel the US market is an interesting space. You do have pricing pressure, which is there, we've seen. There's still an interesting space. If you do a good job, you can pick up meaningful market share, you can earn some good money. You can have still have few relatively limited competition opportunities. And the other thing is, right now, as you're seeing is, and what you might have heard from the commentary of other players as well, is some of the larger companies are pruning down their portfolios, which opens it up. So let's see what happens there as well.
So you see an opportunity to gain volumes on some of those products?
Yeah.
Okay. And so when do we start seeing filings happening from the Onco Oral facility?
So Onco Oral is something that the batches are under progress right now. So I think the first of the filings would happen maybe at the end of FY19 or most likely first quarter FY20 or so.
Okay. And so my last question is on the fact that we will be commercializing 2 to 3 additional facility over the course of the next 1 year.
Yeah.
So kind of operational cost increases can we expect from these facilities?
Yeah, that's true.
What kind?
As in the quantum, anything would be helpful?
But difficult. We generally don't give guidance.
Okay. Sure, sir. Thank you. Thanks.
Thank you. The next question is a follow-up from the line of Dheeresh Pathak from Goldman Sachs. Please go ahead.
Thank you. This on the balance sheet, I see this, other intangible asset and intangible assets under development, which has increased, by about 135 crores year over year. Can you just provide some light on that?
So, like you are aware that Alembic Pharma has been charging off all its R&D expenses to P&L account. This is the R&D expense done by Aleor, which is a joint venture partner. And since they are still not in production, they have been clubbing it as intangible assets, and we do a consolidation, line by line consolidation, being a subsidiary. So our portion of, or our share of that intangible is appearing on our consolidated balance sheet.
So both the line items, other intangible asset and intangible assets under development, about 162 crores, that refer to Aleor.
Yeah.
And your stake in the JV is?
Sorry? No, speak up. Yeah.
So basically, under development is, as YPG said, belongs to Aleor, while the other one is for the acquisition that we made for Audit. Those are the ANDA values of those acquisitions.
What is other intangible assets? Sorry, I didn't hear the last part.
Okay, so we made an Audit acquisition in November.
Audit acquisition.
Yeah. So that 60 odd crores belongs to Audit.
Okay, and what is our stake in Aleor JV?
Aleor is 60%.
60%. So this 100 crores of 99 whatever, rounding off to 100 as of 31st March 2018, this refers to 60% share of the cost of developments of AND and Aleor.
Yes.
No, it's 100%. Not 60%. It would be a full value, because what happens is that as the new standard goes, you put in 100% value there, and then you take it out as a minority interest on the balance sheet, basically. So this represents the 100% value.
So the right way to think is that till date, Aleor has spent about 100 crores in R&D.
That's true.
Okay. On P&L, there is a share of loss from JV this quarter which has increased. What is that coming from?
Yeah. So that is largely attributable to some returns that we got on our Algerian joint venture. You are aware that the plant got there was an accident in the plant and there was fire. After that, we got some sales return, and there are some fixed overheads pertaining to that joint venture. That is the loss attributable to that JV.
Okay. All right. Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Nitin Agarwal from IDFC. Please go ahead.
So thanks. One more housekeeping question. On SG&A, our costs have been, sort of moving around all over the place in this current year. I mean, how should we look at it? Is there any particular reason why these costs are lower on a QQ basis this quarter? And how should we look at it in general? So the SG&A number.
No, meaning the other expenses.
Other expenses.
What is your question? I mean, I think it has been fairly following us a trend. But what is your question?
So, last quarter it was 180 odd crores. It's fallen off again in this quarter. I mean, so how should we, look at this cost item as we model it going forward?
And then I think we are looking at two different numbers. Other expenses is 258 crore this quarter. You are looking at consolidated or you are looking at standalone?
It's a console number, excluding the R&D spend.
Okay, excluding the R&D. Okay, so you have done that calculation. No, but the entire R&D you can't exclude from other expenses, because R&D gets clubbed everywhere. So R&D, okay, so now what the accounting standard says that you can't have a function-wise expenses. You have to have the head of expense. So R&D expense would come from the material, R&D expense will also come in employee cost, R&D expense will come in depreciation, amortization, and other expense.
Fair enough. Got it. Okay.
So understood.
Got it. And have we also, some of the newer plants, the operational costs, have they already started appearing in the P&L, or all of them will come in incrementally going forward?
All of this will come in incrementally going forward.
Okay. Thank you.
Thank you. Reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone.
I think we can take last couple of questions. There are not many questions coming also. So then we can conclude the call. You can take all the pending questions, whatever is there.
Sure, sir.
Yeah, then we can conclude the call.
Right. The next question is from the line of Kunal Randeria from Antique Stock Broking. Please go ahead.
What is the cost of debt?
Cost of debt is, it's a moving number. You can't have one fixed number. So during the year, it has moved from between 6.75 to about 7.25, 7.35%, INR.
Okay. And
some what you call dollar loans in subsidiaries accounts could be at around LIBOR plus 100, 125 basis points.
Okay. And so what is the proportion of foreign debt in this 700 crores?
What is the proportion of foreign debt? Foreign debt is about how much? $20 million? $20 million, about.
All right.
All in dollars only.
Okay. Thank you.
Thank you. The next question is a follow-up from the line of Girish Pathak from Goldman Sachs. Please go ahead.
Yeah. So this interest you must be capitalizing, right? Because you're hardly showing interest expense in the P&L.
So interest, the direct interest cost on borrowings for projects, we are capitalizing that we are obliged to capitalize that. But interest expenses on all other borrowings used for maintenance capex or for the working capital is being charged off.
Okay, so we will see like we are seeing 910 crores of CWIP. You're saying 600 crores extra you will spend. So 1500 crores of assets will come up for depreciation and interest expense. That will happen from FY20 onward, right?
Absolutely.
Okay. Thank you.
Thank you. As there are no further questions from the participants, I would now like to hand over the floor to Mr. R.K. Baheti for his closing comments. Over to you, sir.
Thank you very much. Thank you all participants for joining the conference call, and we'll continue our dialogue offline if any of you have more questions, and look forward to see you in next quarter again. Thank you very much.